Well, hello guys. How we doing tonight? Had a chill vibe, so it's feeling a little bit more slower music. Hope you guys enjoyed still. Doing good, doing good. A little tired today. It's a big Monday. It's been a while since I've traded a Monday. Well, 2 weeks. But you know how trading is, right? Every single week feels long. I feel like I was excited to get back into it. We had an easy trading day for my model today, so we'll talk about it. But definitely feeling tired today. Don't know why. Probably no reason behind it, right? But on days like this, it certainly does feel good to have an easy trade. So we'll get right into that. I hope you guys did well today because looking at our weekly outlook, right? We were expecting upside. That's what I wanted to see. Of course, I was ready for downside, but with the raid, once again, a little hard to see just in case you missed it. I'm going to zoom in. You can see it got rated. I like to refer to my open, high, low, close values here. I see that the low, so L here, is 19604.25, and the low right here is 19970. No, I'm looking at the close. Wow, 19602.25. So it got rated by two handles, which is a little under two handles actually, which is plenty. I don't care how big it got rated or not. This is weird because we didn't have a new week opening gap on the previous week. I wanted to bring in our new week opening gaps here to refer to that last part, that volume imbalance, which was a very nice stopping point for the day, right? We fully filled that gap on NASDAQ and then reversed, and on ES, pretty much the same thing, right? To reversed, retraced to a close. But this was our final part, our final breaking point of this area we've been consolidating within. So I'm very happy to see that. Definitely excited to see what's going to happen for the rest of the week. We have quite a large gap. And just so we can see here, 79 handles. That's quite big in my book, near 0.5%. So I want to see us return to that gap in some points. If not, it's just going to do exactly like we did right here at the beginning of March, where we leave a huge gap, we consolidate only to return to it later, right? You can refer to it, you can study new week opening gaps quite a bit, but this is what happens most times that we have a large gap. We see a large expansion away from it, followed by it being a big draw into the coming weeks. So hopefully we don't see that. I want to see some downside. I want to see price go here, but we still have a lot of room to the upside before we go there. I like to start these reviews now with a little bit of insight into what's going to happen next, what happened today, and then we can go down in time frames and review the setups. But important to notice as well that there was SMT at this level. I noticed that I did not mention it at all during the price action, not the price action review. See, I get confused as well. The weekly outlook that we had yesterday, right? We went quite quick and I just forgot to mention it, didn't even see it actually. So did want to mention that very quickly. But now we can, let's leave these new week opening gaps actually. And let's go down to a 15-minute chart. Look at the daily range. If we go in replay mode here, just so I don't have to mess around with the indicator settings, we can see a very clear trending day, right? What did we talk about yesterday? We said, I want to see Monday be trending. And that's exactly what we got. We have a very nice bullish delivery throughout the whole day. No matter, London was very bullish as well, overnight bullish as well. Had a little bit of a high resistance move during New York. We'll talk about it, right? But you still had the opportunity here right at New York Open to have a nice run to the upside with a very clear draw on liquidity being that new week opening cap. So my students know, but I treat every single gap in the same exact way. I look at it as a big magnet. So I know it's going to be a draw. I know price is going to gravitate towards these gap, especially a large gap just like this that we had previously, right? This is what, 2 weeks ago at this point, right? From the 9th of March. It is a huge drawn liquidity for me, and I understand that it is a big magnet. I just don't know the timing. So I use statistics to tell me about timing, and of course, Monday is going to be a very big probability of being met. Now, wait, I am pissed off. I don't want to see this. This little vertical line was pissing me off, so I had to put it off. Now, on trending days like this, it's very simple. If price has already expanded plenty before New York Open, and I see a setup to go long in New York Open, I'm going to anticipate that for the rest of the day, it's just going to keep going up, right? We've had expansion higher in Asia, expansion higher in London. I will expect that New York will do the same thing. Now, with that in mind, do you have any key levels you can go off of? Well, not really, right? So how do you decide high probability setups? How do you decide, well, this went down enough and now I can go long when we've already expanded so much? Well, for me, that's all about SMT. If we look at these swing points that are formed here in the overnight session, because we're looking at it at 9:30, we can see some very nice SMT. I'll mark it out. I believe, what swing points? Well, this one is a little more obvious, so we'll use this one. But if not, we can see this tiny swing point is the one I was comparing right here. A lot of divergence at this level is what we have to notice. Right at 9:30, we had our Judas swing confirmed with SMT, right? What we like to call time-based manipulation. That's what we're looking for. And from that point on, I can trust this low that has a high probability of forming a move. And then all I have to do is go down my time frames. Right? I'm going to remove our liquidity levels because on trending days, it has no impact on price at all, right? We expect a trending day. We're not going to be looking for a reversal off of these levels. We did have, what was it, 9:45 news? I believe it was PMI. I'm not sure. But for me, that means I need to wait until then, right? Unless what? This is something we haven't talked about in a little bit, actually. What is the only reason why I can look to trade before news, right? And especially we're talking about news in the New York AM session, right? So 9:30 to 10 a.m. news. When can I trade before it? Well, when I will expect that news to be not manipulation, but expansion. And that can only occur, right? This is part of our rule-based approach. That can only occur if at 9:30 I have a clear Judas swing confirmed with SMT. What is a Judas swing, right? It's a fake move. That's all I need to know. Today I'm bullish. I'm expecting price to return to our new week opening gap, right? This is all stuff that we covered in the weekly outlook. Then if I see that at 9:30 we have a move lower with SMT, then I don't need anything more. And there's further SMT here that I see on our 1 minute chart, right? From these, a little hard to spot here on ES since it had a little bit of an easier time going up right here, right? We have divergence here. So 9:30, clear Judas swing, confirmed with SMT. The presence of SMT here is necessary. Then I don't need to wait for the news because I understand that the news should expand towards my drawn liquidity. Those are the only times I look to trade before news. And even on my live account, that is where I traded the most, right? So on my live account, I still do that. Be careful though, if you're trading live funds, news requirements, news margin requirements can be quite hefty sometimes. So make sure you know your limits, make sure you know your margins, and that you're not getting margin called just because you wanted to trade before the news. And in this case, what setup are we looking for? Same thing as always, guys. We have a breaker block that forms right here, right? From breaking that low. Even better when I see the SMT form like this. Always like to bring standard deviations into it. Of course, bring beautiful confluence to our new week opening gap right here. That's what we see at the high. Right at this level. And I mean, it's simple at that point, right? You have your entry level right here. And no, I'm not being picky and saying, oh, well, the one below looks better. No, I'm taking the first unicorn that presents itself to me. This is how you can maintain a clear access. Can you please enable this? Noise suppression. What do you mean by this, Doomer? I do. Wait, why don't I have noise suppression? Yeah, I do have my noise suppression. What are you hearing? Is it because you're hearing me double, Doomer? You do have to mute either the stream or myself. So that might be why. I'm just gonna... Oh, yes, it's fixed. Awesome. Quick question concerning... Oh, what's up, Tim? How you doing, man? Quick question concerning the stop loss. I took that long, but with 2 entry. First on the highest fair value gap and second on the second one. Should I always put the stop loss counting 3 PD array for my last entry? Well, I don't separate entries myself. So that's something that I don't do. So I don't want to give you advice on how you should manage your trade if it's in a way that's different than myself. Because I don't know, right? I don't want to speak on something I'm not a pleasure. I'm not a, well, I don't want to say pro, but that I'm not good with, familiar with in this case, right? So personally, myself, I will always use the highest array. And when it does not offer enough risk to reward, which is what we'll talk here in a second, let's just look at the stop loss. You have fair value gap, and inversion fair value gap. Wow. So actually, you would have gotten stopped out here. Very simple. Okay, so the better entry was the one below. I didn't even notice this was a stop loss. Wonderful. We'll have a chance to look at your entry, right? But in this case, I would be looking at something like this, right? Entering on that one for third PD array. Of course, there's an inversion fair value gap here, so I do have to count it. And placing my stop, allowing it to trade into that volume imbalance. Would have been a bit greedy. That's true. Just placing it a few ticks lower, which is what I personally did. That's why I'm surprised. But it would have gotten stopped out with the 3 PD array stop loss. But then brought it up just in case. In this case, got stopped out. Best entry was on the close of the IFVG to the left. What do you mean the close of the IFVG? So right here? Because I'm looking at a re-entry opportunity. Because that's the thing. There's no best entry. There's one entry. The valid entry. And the valid entry is the first entry that is presented. I don't get to choose which entry is best. This is how I personally decide to trade. Entered on the IFVG close, stop at protected low. No, I really don't. That's just not my model, so I can't consider that. But yes, it would have offered plenty to this objective. For me, that just means it's a stop right here. But this is me getting stopped out right here. Is my trade still valid? Is my idea still valid? Yes, 100%. Nothing more to add there. Oh, I'm noticing something. Okay, no. Trade is still valid. I just got stopped out. So what am I going to look for? Well, very simple. I'm going to look for a confirmation to the upside, just like any continuation model. So all I need to see is I need to see us form an order block, which a lot of people now like to call changes in the state of delivery, right? The formation of an order block, or the inversion of a fair value gap. So as soon as I see this and price expands above it, I can take a breakout here. That's what I personally scaled in, right? Because you're talking about scaling in, Alex, but I don't separate entries. I don't scale down into position. I'm forgetting how people call it. I don't average down. I think that's how people call it. Basically, I don't add to a losing position. I only add to a winning position. So it has to be moving on side. No, not DCA, Rusty. We're talking about scaling in. DCA is a long-term investment strategy. But when we're talking about scaling in, I don't scale down. I scale up. DCA is just scaling based on time. Too zoomed in the macro delivery. Well, see, I always look for the larger picture, right? I'm trying to catch the daily expansion. That's what I do. I honestly did not notice this was a stop because I had my stop just below, right? Allowing it to trade within this to hold that balanced price range. Very cherry picked today. I'm not gonna lie. Sometimes I'll get stopped out on moves like these, but the absolute mechanical stop loss would have been a loss on this move. Actually, sad to see here. Would have had an opportunity to take the continuation breakout. So basically, as soon as we expand here, so I can't really have a precise entry here because I'm marketing as we expand. So let's just do the midpoint of the candle. Let's say worst case scenario. My stop is going to be, once again, 3 PD array stop loss rule. In this case, I don't have 3 PD arrays. I have the inversion fair value gap, and then I have an order block right here. So I'll place it all the way down here. And in this case, it would have barely made any risk to reward up to this high, which is not good enough. Of course, choosing the midpoint of the candle. No, it's a little hard, even to the midpoint. If we bring this in, you're going to like this, Tim, of course. But we bring the midline in here. Trading to that midline would have offered enough risk to reward. Honestly, not the best of setups. Really, this was a very beautiful setup that just would not have worked. You know, that happens sometimes. There isn't much to say. I'm used to it now. You have losers, you have wins. Even when you're right about where it's going, it doesn't mean you'll make money on that move. Of course, there's plenty more opportunities, which we'll discuss, but from that time, yeah, Tim stopped buying and bounced. I like that heartbreak. But at that time, it's really more scalps, and this is what I personally do. For the stop loss, you count from the most recent or form the closest to your entry. I count from my entry PD array. So the whole mentality behind the 3 PD array stop loss rule is that I want to allow for the invalidation of those PD arrays. So I want to give price some room, right, for 3 PD arrays. So what I'm going to do is I'm going to look for it to invalidate 3 onside PD arrays starting with my entry. So my entry is on this fair value gap. So that's the first one. I want my stop to not just be at that fair value gap low, to allow for it to invalidate it. Then I have this next fair value gap here, but I also have an inversion fair value gap to the left. So that tells me those are my 3 PD arrays that I need to allow price to invalidate, but nothing past. And I include the volume imbalance here, which means my stop is at the low of this. Does that make a little bit more sense for you? I haven't explained it in a while, so more than happy to. I should really do some individual videos on the key concepts behind it, like things that I have a lot of questions on. For example, how I interact with news, right? When am I allowed to trade before news? 3 PD array stop loss rule. But at that point, I'm becoming a YouTuber, and I'm not there yet. What I saw was that volume imbalance was included as the fair value gap stop below IFVG. Well, the IFVG is here. So stop below IFVG gives you a stop right here, which is even worse. And now you're not allowing it to trade into that fair value gap. You have an IFVG here. Of course, if you didn't spot this, then now you would have been fine because your stop would have been all the way down here. But then, once again, not offering enough risk to reward. So you would have waited for a better entry until that was in the 1.7s, above 1.7. Even then, like, there are 1,000 scenarios where this could be a win, but I don't like for us to analyze these charts with hindsight and discuss stuff like this. Truth is, this is a variance trade. More often than not, this is going to be a loss. Sometimes you're going to mismanage it, which ends up being a win, but it's still a mistake. I like to think about it mechanically so that a beginner can come to this model, come see this trade, and actually understand that, hey, well, if I follow my rules exactly, this is a loss. That's it. And maybe later down the line, I figure out some stuff that tells me no. Like for me, I knew that I wanted my stop a little bit lower. But truth is, sometimes this is going to be, I'm going to notice this and say, you know what, I want to give it a little more room today. And sometimes I'm going to say, I want it a little tighter. And then that's going to cause me to lose a trade. And that's just manual input from discretion. But when we look at it from a mechanical standpoint, I follow my rules. This is, let's bring it back. This is exactly how the trade would have ended up. So I think it's important to point that out. Since we're looking at charts with hindsight, right after the fact, I think it's important to be very pessimistic in the results. Very realistic, basically, right? Trading is hard. You're going to make mistakes. If this wasn't a mistake, it would have been a loss. It's not a question of time freeze. I've said that before. I don't look back in time, because if I was going to look back in time, it'd be fair value gap, fair value gap, fair value gap. I look based on price. So this is my entry. What I'm going to do is I'm going to do this. I'm looking for price levels. Oh, now I have this fair value gap. I'm still doing the same thing. Oh, now I have this inversion fair value gap. That's 3. Now, since I have this fair value gap, that's my lowest. My stop should be here. Oh, volume imbalance included in the fair value gap. You always got to do this, right? I'm forgetting what the word for it is in English. From side to side, up and down. Makes a little more sense now. But yes, other than that, I don't know. I really did not look at the chart, so we can look at it together here. I'm seeing a breaker block form here. Honestly, when we're this close to my entry, to my target, really hard to find a trade here. I'd be more so considering once we've reached that target, can I look for a retracement, right? The true long was going to be at the start of the day. So I was just holding that through. Let's look if there are any retracement opportunities. I'm not going to consider any other longs, right? And if you guys want the mechanical rule to it, you guys know it. I pop up my implied dealing range, and I'm always looking for it to look for opportunities past the midpoint of it, and not quarters. Let's bring this guy in below the midpoint of it. Then you might say, well, look, now we retraced here. You can look for a trade there. Yeah, but I need a breaker block. I trade unicorns, so I need a breaker block formation with an overlapping PD array. That's what I trade because that's what I've found to be the highest probability. And even if your target was the midpoint, which if you use data, you would at least expect it to get filled to the midpoint, if not more. Even then, no opportunity, no breaker, right? This is a midline right here, so I need entries below this. So really, no, there's no way for me to even try and convince myself there was a long opportunity here. But what we can look for is that once we trade within that gap, can we look for an opportunity to have a retracement lower? 100%. Your objective is met. So let's look if we have a setup. So as soon as we hit that gap, I don't even spend the time to try and justify until I find a breaker. Because until I find a breaker, I won't have an entry. So what's the point of me trying to look for a trade here? Let's just look for a breaker and then see if it's a valid entry. So right here, we have a breaker. I am going to mark out in advance 11:30 because as you guys know, I have a hard stop at 11:30 until the afternoon session. I do see a breaker block, right? We see this range that is formed right here. Let's bring this in. And why is this so misaligned? Let's remove the new week opening gap for now so that we can see something. And let's just reset the chart view actually. That's all that we needed to do. But we were looking, where were we? Right here. Right here, we're looking at these highs. There's definitely SMT here, right? Looking at these highs. Well, yes, ES equal. What does ES equal do? Right? We've talked about this many times over. When ES forms an equal level, I treat it as it is mitigated. What does mitigated mean? Reached, taking out, whatever word you prefer, right? And yes, this is something, every time I bring it up, I feel bad because this seems so cherry picked, but this is something that I've mentioned with extreme consistency throughout the past year, all right? When ES forms an equal high or an equal low, and I'm looking for SMT, I treat it as if it had taken it out. All based on data, guys, and we can see it. So for me, this, oh, well, let's put it on the swing point, right? This is valid SMT. Right here, we have a breaker block that is formed. As soon as we trade below this level right here, we'll mark it out. You know, we make templates, why not use them? I will also remove the new week opening gap now that it's reached, just so we can have a cleaner chart. And actually, we even have another breaker right here. This is a breaker range. So I'd have to go down the time frames. Whenever I see this, right, I think I've told you guys before, I tend to just use the whole range. Or I'll go down to a 30-second chart and find the actual bearish candle, right? Because I can't have a bearish breaker that's a bullish candle. So I'll look at the range on the lower time frame so I can refine my level to the last down close candle. This is one of the only reasons why I have my second charts right here. Let's see, on this chart, it's an intrabar, right? It's a 30-second candle. But then I can use this, and I have a very, very clean setup to go short with a very tight stop loss if I'm seeing correctly. Well, yes, the invalidation point of your breaker is going to be your stop. You also have, once again, SMT at those highs, additional confluence. Truly just an easy and beautiful trade here. And even just using the standard deviations of the breaker you're using, right, you have a very nice partial at 2. Let's actually look. Yep, it was reached right here. Very clean and easy partial at 2, followed by a lot of opportunity to go lower. I don't know if we reached all that. No. So this is more so, well, there's no way I'm taking another partial before here. So truth is, for me, this is more so partial and then getting broken even within this movement back up. But still, partial at 2.7, you take at least a 50% partial. I always say that. It's always the rule with the first partial. Then it's very beautiful. I would have at least expected it to trade to these equal lows down here. But as I told you guys, I was just long early in the morning, one and done for the day. This is weird for me, but definitely a very nice scalp opportunity here. If you didn't look for that breaker specifically, well, you had the bigger breaker that formed right here that give you an entry. This is just a volume imbalance. I'm looking for an entry. I don't see one. Oh, well, yes, never mind. Inversion fair value gap. Right here. Let's mark it out so it stands out. The breaker is formed on this line, right? That's why I like to draw it. So then you're just looking for a retracement to it. That's the first time we retraced into a bearish unicorn in this sense. And then 3PD array stop loss rule will place your stop at, you have inversion fair value gap, then you have order block and the fair value gap right here. So your stop would be on this one high. And would I look to partial here? Well, yes, actually. Why? What do I need for partial in terms of risk to reward? At least 1.7. That's what I've found to be the best. I don't know if I'm using this term right in this sense, but the best value. It's EV pretty much. I know that if I take partials at 1.8, I'll make less money over time. So I need to look for partials at least 1.7. But if I look for 1.8, then I lose too many trades. So it's 1.7 for me. And that would have been a quick in partial break even. If you had a different partial level, well, at this point, I'm up 3.59 R almost, but it didn't reach my target and starts consolidating. There is nowhere I'm staying in this trade, right? But if I partial, then it's a little different. I'll wait for my objective to be hit. And in this case, you wouldn't have had time. So very nice in terms of the initial setup, very weird in delivery. That's the truth. But would you had the opportunity to make money? Yes. So if your bias was short, you would have had 2 opportunities to take a partial and then get broken even, which is pretty rough on the mental, at least for myself. And if your bias was long, we're looking at a stop loss followed by a very bad continuation entry. I'll be honest, this is not the most beautiful continuation entry. I'd be satisfied with a student coming to me telling me, you know, I was looking for a long, took a loss, then I took a small short, clutched my day. Not the best, right? So in terms of higher time frame delivery, it went right where we wanted it to, but in terms of everything else, wasn't the prettiest. And if we look at lunch, we can easily look at lunch, right? There was no real opportunity for a lunch trade because, as I always tell you guys, I'll look at the range from noon to 1. Let's actually bring in our session here. I'll look at the range from noon to 1 only when our retracement objective has been met. And if we look at this range, do you see any 15-minute inefficiencies? I don't really see any. But anyways, I want to be using the full daily range here. And for me to say that our objective has been met, I need to see us return to a discount. And clearly that was not going to happen. Well, thankfully, that did not happen during lunch. We also had Trump that just decided he was going to be speaking at 2:45, so I really wasn't interested in the PM session. And as you can see, before 2:45, nothing happened. Price was just consolidating until then. And we had a huge wick form. And then we finally went for that lunch high. Right, so you had a lunch trade, but is that tradable? Well, I'm not entering on a trade just before Trump is speaking. And honestly, you see this wick, well, that's probably going to stop me out. So let's actually look. First bullish breaker to form is this one right here. Let's extend it out. We're looking at this range. We traded lower, breaking the low of that range, and then traded higher. That forms a bullish breaker block. And of course, you have the lunch low framework, right? I brought in the indicator just for this. You see the noon to, this is noon to 130 range in this case, right? Highest high, lowest low. Have a very clean framework, standard deviations in line with everything. I'd look for partial just at this high. I just visualize the premium and discount, guys. You know me, but let's actually do it correctly, right? 5-minute chart. This is the range that I will be looking to reverse on this framework. Oh, let's go back to a 5-minute actually. And then we're going to be looking at our first premium and efficiency, which in this case would be here. So let's use the correct partial, the mechanical partial. Of course, I'm used to it. And as you guys see from this, this is all low resistance. There is no defense, right? I like to use this term, this analogy quite a bit. So there is no defense until this high right here. But let's be pessimistic. As I say, we're reviewing charts. It's not time to be optimistic and say, oh, I would have seen that, or I could have traded that. No, let's just look at price for how it is. So partial right here, entry, where would be the entry? First overlapping PD array. I'm looking to make sure we don't have an inversion fair value gap entry first, but no, it is really that fair value gap. 3 PD array stop loss rule will place your stop there. Why? Because we don't have any PD arrays, right? You have fair value gap order block, you don't have 3, so your stop is going at the invalidation point of the breaker, because that's a maximum area you can place it. And just to that partial, 1.6, that's a little rough. I would have looked for more. And see, just the simple fact that I see equal highs above here, that's going to bring me up to 1.7, right? We just talked about it. 1.67, still not enough. I'm really big on my numbers. But see, I have this level right here that aligns beautifully with the reversal range. So then I could have looked for that. So that's looking for what? 10 handles more? Let's actually look at it. That's looking for 3.5 handles more. Wow. Definitely would have looked at partial on that higher point. And that's 1.9R. And let's be honest here, you would have had a bunch of time to be scared with price just consolidating near your entry, going very deep in your drawdown. But at the end of the day, would have been a successful trade. And as I said, there's no way I'm still in this trade all the way to lunch high, because there's Trump speaking. I mean, if you're on a prop firm, go for it. Trade during news. You're in a simulated environment. So I would definitely consider it. But if you're trading live funds, there is no way I'm holding a trade while Trump is speaking, unless it's on a gambling account that I just opened specifically for that purpose, which I did in the past. I don't see what's wrong with that. It's risk to reward, right? And sometimes it's a play based on the volatility. I know price will be volatile. I think it's going to break to the upside. So let me wager. I have done that a lot of times before, especially with Trump speaking. It's literally free money. Just take breakouts on both sides. But I don't recommend that on prop firms. On prop firms, you can definitely look to trade before certain news, right? I have a setup here. I look to take the trade before the news, but see, would have stopped you at break even anyways with this entry. So in that sense, would have been a rough day filled with TP1 followed by break even. That's pretty much what we're looking at here. But definitely interesting in that sense. Do you guys have any questions? Maybe there's a different setup. Of course, I'm never considering trading anything different. Just like I have the 11:30 stop, I'm never looking for a trade past 2:30 in the PM session. And truth is, you guys know me, I rarely even trade the PM session. For me, I was one and done. Got lucky that this trade was a win when I had the incorrect mechanical stop loss. But even if that was a loss for me, I probably would have closed my charts after I saw price leaving without me. Not really interested in trading those types of retracements. What I mean by those types, I mean this late into the day. No questions. Is there a big price difference between 10 micros and 1 minute? It's the same thing. What do you mean by price? Do you mean margin? Like if I'm trading a live account, is there a big difference between trading 10 micros and 1 minute in terms of margin? My old mentor always complained about micro fees. So micro fees will cost you a little bit more. So what you're talking about is commissions, right? And transaction fees. So in general, right? I'm not talking about any specific broker, just the ones that I have personally experience with. I have, it's not $8 per micro that you're going to be trading. No. Well, see, sometimes on different brokers, perhaps. All right. Oh, price difference total. Yeah, that would make trading 10 micros vs 1 mini. I know. Yeah, we're probably in that range. We're probably in that range of around $8, $9, $10 difference at the end of the day. Honestly, I don't care. You know, we're complaining about $10 here, right? Even if you're trading, well, actually, if you're trading 1 micro, that's going to be a problem. But if you're already at the point that you're going to be trading 10 micros, $8 is just a cost of doing business, right? When you're trading live, it's just prop firms take away all of that from us, right? We forget to think about this stuff. That's why it took me a few months to get used to live conditions once again after getting back from props, because it's so different. But that's the real world. So enjoy prop firms, abuse the fuck out of them until you make too much and they don't want you there anymore. And then you have to come back to a real world, trade live accounts, which suck compared to simulated prop firm conditions. Do small fee compared to UTP? I don't know what broker you were using. But commissions for trades, yes. And then you have specific transaction fees, so trading fees, uncertain. They say only 1% get payouts for props. I would say it's more than 1%. I think it was 16% from the data from TopStep. So from TopStep is 1% of everyone that buys account. So from the people that get accounts, 16%. Oh, no, it's from the people that get funded. So from all the people that pass their accounts, only 16% of them reach the first payout. But see, it's happened to me once that I passed an account and it didn't even reach the first payout before I blew it. So that's just part of the game in my book. It's kind of weird because they separate it into accounts, and then once you get through that drawdown. But on my live account, my worst drawdown was 9%. That's worse. That would have failed me a prop firm account. But now I'm back up. It's just a period. It was a large period of drawdown. Always going to be my biggest one of the year, February. But I'm back from that now. So it's a different world. You can't trade props the same way you trade a live account. That's my personal opinion. Well, no, it's actually the opposite. You can't trade a live account like you trade props. It's just props limit you very big. They don't have a reason to lie. Yeah, that's true. But they have incentive. It's not a reason. I always associate reason with values. They have incentive. They have money. Yeah, 100%. But before we go into a full rant about prop firms, which by the way, I do love, and I love the opportunity that they bring to the space. They are the only reason why I have money now, because if not, I would have needed to spend a lot of time building a personal account. You guys have a great night. All right, we'll see each other back on Thursday. I will not be trading until then. Yeah, good luck trading if you are before then. But if not, we'll see each other on Thursday, guys. You guys have a good one.